Well, the market started off all sunshine and rainbows and then just sort of sold off from there. I think that I know why. I'm going to share the two reasons I believe that the market sold off the way that it did. I'll share them with you in this video, where we could potentially go from here forward over the next, we'll say, 2 weeks. And then after that, what exactly might happen. I'm also going to give updated commentary on the best penny stocks to buy now. We'll see how they still rate and what exactly needs to happen moving forward for them to stay on that list. If you guys want to see more of my analyses, more of my technicals, commentary, and buys and sells, there's a whole team of experts like me over at the Discord, link down in the description. You guys can check it out, code word doctor. I'm going to tell you more about it later. In the meantime, let me pop this up here. This is QQQ that we're looking at. This is the NASDAQ 100 ETF. And I'll tell you what, that rising wedge pattern is a little bit concerning. I took a short hedge position out today towards the end of the market day. I just wanted to make sure that if we do in fact fall out of this for whatever reason, I want to make sure that I have a little bit to prepare myself for that. So that's one thing that I wanted to comment on. Now, why did we get that big red candle right there? I mean, we're nearing the apex of this thing. Let's drop down to the hourly chart because there's something intraday that's very much worth looking at. And that happens to be the candle that happened right here that contained the 8:30 hour where we got the CPI news, because this thing blasted off and actually hit the December 16th high and exceeded it by 2 cents. 537.48 was the high that we had back in December. Today we hit 537.50. And then when the market opened, we got to that regular trading hours. Look at the two candles that we got. We sold back down to the pre-market, went up, exceeded this top part of the trend line, couldn't make it back up there and sit on top of the high. So that meant that we had to go and look for where the floor was. So CPI did help us out initially. However, the Trump tariff stuff with China, I don't think helped us out very much, because even though it said that the deal is done, it's not a very good deal. And people said it's more of a framework than a deal. There's just too many details that they don't know. They think there's probably gonna be ongoing discussions. And I gotta say, between now and July 9th, we have anything to worry about as far as those tariffs go. It can be really just, we have to watch and see. It really is that wild card that keeps the market guessing over time. I do like cheap prices though when it comes to buying those deals. And I gotta say, there's a lot of stuff that's a little bit expensive right now. So that's something to keep in mind. I still remain cautiously bullish. With that said, let's jump over here and take a look at what we have to see. First of all, staying inside the rising wedge is gonna help us out with staying bullish. Falling outside of it and then retesting it could lead to that bearishness should it happen. We have PPI numbers coming out. A hawkish Fed is something that could send us reeling back down in the markets. Tariff news that's negative is something that can also send us down in the markets. Geopolitical risk. If we go out to the daily chart on this, there we go. It'll adjust for us. Let me hit the reset the view there so we can actually see what's going on. So one reason that we sold off, we're near all-time highs. And just look at what we got the last 2 times that we got up there. We hit an all-time high on December 16th. We sold off pretty aggressively. We hit another all-time high on February the 19th, and then we sold off, well, you guys tell me what you think of that. We sold off really aggressively during that time, going all the way up from 540.01 all the way down to the low price on this 402. So that you guys know, I don't need to tell you, that was a very painful drop. But we had a rapid rise since that time, and the bulls and the bears are just fighting it out. We're narrowing down, squeezing on this, blasting through the top of this is going to be a bullish thing, and we want to make sure that we have the circumstances ready to go should we get there. I do, with the current environment that we find ourselves in, I do have a little fear over a triple top. So a double top is a bearish thing. You guys can see the sell. A triple top is also a bearish thing, and we're pretty much in that territory to see that triple top take place. So for me, should we go back to 540.01 or even to that 537.48 or 537.50, whichever it is that you want to go with, to me, it makes me a little bit nervous. But again, it's in a broader sense. If we're able to exceed it, especially on good volume or on super positive news, that's things that can move us up to all-time highs. We need to sit on top of these lines that you see going straight across the middle of your screen. We want to hold each of those as support. So far, none of the 3 held as support as of today, nor as of the post-market as I record this video. Over to SPY. Once again, there's the pre-market, and it blasted up through the 605.21, which is a previous all-time high that we had in for the S&P 500 ETF here, SPY. Couldn't hold it, and you guys can even see if I zoom in on this hourly chart, we could not get back up there, so didn't make it to that ceiling. So then we started looking for the floor. We sold off from there. Quite a day. My 0 DTE game today was on point, coming out ahead on that one. Remember, live trades tomorrow, 2 p.m. That's Thursday, June 12th at 2 p.m. over at the Discord. You can check out me, Stockmo. I don't know if anybody else is joining us, but definitely the two of us will be doing some live trading around that 2 p.m. hour over at the Discord. Links in the description, code word doctor. Make sure that you use the earner tier so you get access to it. So let me put this back up here for us. Let's go over to IWM, because this inverse head and shoulders, the thing that we need for this, or things that we need, are those 4 pillars that I talked about that prop up markets. They need to be shiny, polished, and bright, and sentiment's got to be excellent. Liquidity's got to be there. If we do, there's that 248.08. I'm going to keep on talking about it. So the 4 pillars, just to recap very quickly, because I want to make sure I'm respectful of your time and mine. We need excellent GDP. Right now, it's doing okay, as long as some other conditions are satisfied. Tariffs are definitely part of that. Another thing is then related to those tariffs is inflation. We need inflation to remain subdued. You saw what happened when CPI numbers came out today. It was not CPI numbers' fault that we sold off the way that we did. I really do think it had a lot to do with the technicals that we were facing, the fact that we were near an all-time high, and the whole Trump deal with China not necessarily sounding super sweet, sounding actually a little bit like, is that really a deal though? Like, it's better than what was proposed initially, but it seems like there's some work to go. We'll see if that's right or if that's wrong, but I will say I do think that that's something that happened to us. So strong GDP, subdued inflation, easy monetary policy, and that's exactly why we're listening for the Fed coming up next week on June 18th. We want to watch what happens around that 2 p.m. hour for their decision, and even bigger than that is at 2:30 when Jerome Powell comes out and speaks. We want a really dovish Fed for that easy monetary policy to pour that sweet liquidity all over the markets, because a cash flush market, just go back to 2020 and watch what happened through 2021. Not necessarily that we hit that point where we start to overstimulate and overheat, but it is a bullish time to be in the market when you get that. And then strong labor market also is on the heels of that as well, which goes along with high corporate earnings with some pricing power also put into that. AI doing its thing to really help optimize things is there. I think we're going to find that it really does, as it matures, it's going to find more and more ways to allow the companies to continue to be more profitable over time. So while we have some questions out there in terms of each of those, the whole recession thing is in the back of our minds. It's not at the front of our minds right now. Tariffs are more in the front of our minds, and we kind of just are like, well, things look okay. And so the market's like, I guess I'll keep going up a little bit. And so that's why I stay cautiously bullish, because at any point in time, should that narrative switch over to recession or some super negative news that puts any one of those pillars into question, that's where we're going to get that downward pressure, and it could happen pretty darn quickly. So cautiously bullish. I got an eye on the market as well to see, okay, is there a change in sentiment? Is there a change in the narrative that the market is currently following? Right now, I don't believe that there is. And so I think the direction is still generally upward. So let's get into those best penny stocks to buy now. I'll tell you guys more about the Discord in just a moment. So when we go over to the penny stock side of things here, we'll start off with American Resource Corporation, AREC. Let me put the EMAs up for you, and we'll talk about those and what we see. And so what we got for this is that we are down below everything that we want to be above in order to have bullishness. So we're down below green, down below yellow, and down below red. We need to get back up on top of those. I'm going to say for this one, we want to sit on top of 75%, 75 cents, in order to return back to a bullish state for this one. The RSI dropping down below 50, put it in bearish territory. The weekly RSI, where is it at? It's sitting at 48. The monthly RSI is sitting at 43. So it will all start with the daily if it's going to show up in the weekly and the monthly, and it has to be something that is sustained in order to keep us moving in a bullish direction. So where do we have to go for this? We have to retake, we'll call it 76 cents because it's 75 cents and a few fractional pieces of cents after that, rounds up to 76 cents. Needs to sit on top of that. We want to see the bullish crosses taking place. Pacific Biosciences, not bad in terms of support. I said that we want to keep the 50 EMA as support. We surpassed it. Excellent on the 9th. The 10th, peekabooed and then sold back down, but kept support. Kept support again even after today's sell. The market bias probably didn't help this out. And now's a good time to talk about that market bias, because if the market is going to sell, meaning the NASDAQ, the S&P, Russell 2000 stocks, and Dow Jones, if they're all selling, that market bias is also going to push down on the penny stocks, and most likely in outsized ways. If the market is going to pump in the upward direction, going bullish, especially in a very aggressive way, the penny stocks should also move in an outsized way as well. So please keep that in mind when I talk about the best penny stocks to buy now. I mentioned before about the market bias. If the market sells, so will these. And I think that's what we saw today. So I don't think necessarily that they're down and out unless the market's down and out. If the market's going to rally, like I said, once again, we should also see them rally. So putting this back up here, REKR, this one already hit my price target, sold back down and settled. We could have some long-term potential here if we can stay above the 50 EMA. We'll watch and see. Right now, sort of settling a little bit, putting up the simple moving averages. Look at this. This is why I think that we could still get there. If we can stay above the 200, we could get the 20 to cross the 200. That is a bullish crossover. This 50 down here crossing up over the 200 SMA is a golden cross. We absolutely want to see the 50 cross the 200. There could be some serious and significant upside to follow from REKR. Going to QSI. Now, mind you, this is tied to the quantum stocks. It didn't have a bad day today. The quantum stocks did pull back and sell off a little bit. I talked about in my earlier video. QSI is absolutely part of that. And by the way, like I said about the Discord with the live trading, my buys, sells, technicals, all that kind of stuff, code word doctor, 50% off when you use that code word with the link that's down in the description. And the technicals that I talk about, the options that I use when I trade, if you want to learn about that stuff and really understand the impact and really learn how to build out the alpha in your portfolio and really lean in towards financial freedom, there's some coursework through Stockmo Academy as well. You guys can check out that link. Code word doctor will also work on those. That's a one-time payment for the courses though. You get a massive discount with that. So those links down in the description, check them out. Let's wrap things up with the penny stocks here. QSI, let me pop that up there for you. Had a nice little run up, but all the quantum stocks today really had a high peak and then pulled back pretty darn hard, including QUBT. I talked about them this morning in my morning video and talking about the bargain basement prices that I'm waiting for those. Hopefully they drop back down into the basement at some point in time, just so I can greedily take a big old position in those, because I really do think that there's a lot of promise for some of these companies out there, and I'm really filling out my research for that. But this one was up. They all have these high wick looks to them. IonQ has that same high wick look, but also went red. If we go to Rigetti, we have the high wick looking green on that one though for Rigetti. So back to the penny stocks with QSI, the fact that we have a high wick on it, not really all that surprising. Once again, I say with quantum stocks, if the market sells, but they'll probably sell off a little bit too. Market bias played a huge part in this. I still think that QSI has a lot of potential from here. It reverted back to the mean, back to this 20-day. We almost have the golden cross between the 50 and the 200. I think that this definitely still deserves a spot on the best penny stocks to buy now. BBAI dropping down below its 20-day. We got the 50 over the 200, the 20 over the 50 and the 200. A very bullish setup for us. If we can recover that 20 period simple moving average, it's going to be even better. This is one of my favorite stocks out of the penny stocks for long-term potential. Ocugen is the final one for you. Big old high wicks. I already exited my position out of this. This is one of the ones I've been talking about since May the 20th. You can see that movement. If we come back and find support back here at about $1, I might jump back in. I do think that this is also a company with long-term potential, maybe with some buyouts in its future. We're going to have to watch and see, or even it just becomes a legitimate company with some of the therapies that it has out there, or maybe it's just another momentum play that really puts in some big numbers, goes back up over to that $2 mark like we saw back here, which by the way, look at that top that we had on there. We not only do we have the triple top, we had about a quadruple top, and every time getting that rejection, and that's something that we can really trade on. You can see that resistance that we got over here that explains the rejection that we got here. So we'll see what happens when we retest $1. If we get back down to $1 sometime soon, which we absolutely could, that could set up our next big pump for Ocugen. I think it still deserves a position on this list. So guys, let me know what you think down in the comments about these penny stocks, about the market, about tariffs, whatever it is that you guys want to say. Maybe even just stop in and say hello. I'd absolutely love to hear from you. Hit the subscribe button if you haven't. 2 out of every 3 people do hit that subscribe button, and they're glad that they do. I'm definitely glad that you do, and I really do appreciate the support that you show this channel. And that support is enough for me. If you do want to go above and beyond, not only supporting me, but also furthering the support for yourself, check out the links in the description for the Discord and for the Stockmo Academy courses. You won't be sorry that you did. They are absolutely amazing, and the community is the best community that I've ever had a chance to be part of. Thanks for watching, guys. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you next video.